Yeah, incentives are helpful, I think. Tax incentives certainly add the icing on the cake, if you like. So when you're presenting something to attract foreign investors, a tax incentive, other helpful ways of facilitating their investment, they're the icing on the cake. They're the kind of thing that seal the deal. But that's not really the reason why investors will come to a country like Indonesia. What they need to see is the marginal return on their capital being higher there than in any other place that they're considering. And for that sort of calculation, you need to believe, for example, that labor laws are transparent and open and they're simple to understand. Infrastructure investment is in the right areas, which helps them get their products to the port quickly and at low cost. And things like property rights. If a factory wants to expand, how easy is it to expand? Can they get the necessary permissions? So it's these really sort of deep structural issues that really will drive foreign investment. Tax incentives helpful, but really that shouldn't be the top priority if you're trying to attract this foreign capital.
Okay, with everything already been discussed between us, the booster, the support factors, how do S&P Global Ratings look at Indonesia's economy development, at least for the first quarter this year?
Yeah, the first quarter is going to be tough. I think we saw the rise in COVID cases, not only in Indonesia, but in all of the economies of Southeast Asia. And we've seen from the high-frequency economic data that the Q1 is going to be weak. It may well be that we see in quarter-on-quarter terms growth actually a little bit negative. So we're going to set back our expectations of a recovery maybe 2 to 4 months. Really what we're expecting to see is this recovery pick up steam as we go through the tail end of this year. And that's really going to have to depend on vaccine rollout. If the government can deliver on its targets to get towards 60% coverage by the middle of 2022, we should start to see some real progress in the second half of this year. That will mean we'll see more normalization in the service sector, consumption spending can rise, and then we should start to see that recovery coming through in the third and fourth quarter. So Q1, tough, but we're still pretty hopeful that we're going to see a pretty big rebound in the second half of this year.
With a tough Q1, we have to go through. Speaking about probability, Shaun, will there be another revised down on our GDP growth for the full year 2021?
I think at the moment, uncertainty is exceptionally high. And it's high not only in Indonesia, it's high everywhere. And if you look at economists' forecasts at the moment, you often see the actual numbers coming in some distance away from those forecasts because of all of these uncertainties about COVID. So there is certainly the risk that we see another downgrade to the growth forecast for 2021. I think the Bank Indonesia's latest forecasts seem about right. That range seems appropriate. We think that's a good range to be thinking about for this year. It provides a little bit of a sort of range to think about small and upside risks. Would we get a big downward revision to 2021 beyond the BI range? It's possible, but I think we'd have to see another very large COVID wave, a big increase in hospitalizations, and a return to a hard lockdown. That to us at the moment seems a fairly low probability. And what is more likely in terms of a downside risk is simply that we remain stuck in this economy that we're in at the moment, where growth doesn't necessarily decline too much, but it doesn't really pick up that much either. In that scenario, you could see growth closer to 4% this year rather than 5%, which clearly would set back Indonesia getting back to normal until 2022 or 2023.